Yo, Mark over here. In this video, we'll talk about highly honored SHL stock. Wait a minute. That's the wrong video. Awkward. This is about Tesla. Okay, I'm just gonna cut that out. Don't worry. Okay, in this video, we're talking about Tesla and the two reasons why I think that are pretty impactful for this Tesla stock split that no one's really talking about right now. I don't know why no one's talking about it. Maybe they are. I haven't heard it in the videos that I've been following, at least. And they are material, in my opinion. So, and then also we're talking about the Tesla convertible bonds that I own. What happened to them? How many shares did I end up getting for each Tesla convertible bond? Did I get some cash along with that? And we're gonna get into all of that. But before we jump into this video, if you get any value from this content, don't forget to smash down that like button. It really helps this content, helps other people see this video. And if you haven't already, consider hitting that subscribe button. It's free to do, and I really appreciate it. Okay, let's get into this. So the two reasons why I've been looking forward to a Tesla stock split, which I haven't been hearing anyone talk about, is reason number one, which is a reason that I've actually been really looking forward to, is the fact that when I want to end up selling Tesla shares, so for example, if I want to sell 5,000 in Tesla shares, well, how many shares would I have to sell? I have to sell 4 shares right now. And how much is that? That's $6,000 with a share price, as an example, of 1,500. So I'm kind of overselling a little bit in a way, right? So if there was a Tesla stock split, I would essentially be able to sell less of my equity, keep more of the equity, and be putting less, essentially, shares on the market. It's kind of confusing because I'm putting more shares on the market, but it's less shares in terms of the proportion of how much shares is going to the market, if that makes any sense. So I'm essentially keeping more of my Tesla share equity. And what does that mean? That's probably pretty impactful for every other investor out there. When they want to sell some Tesla shares for some profit, if they need some cash, if they need to invest in something else, buy a house, whatever they need to do, if they need to sell less Tesla shares, that keeps more shares off the market. And keeping more Tesla shares in Tesla shareholders' hands could have some pretty significant impact on the Tesla share price in the market. And so the reason number two, which all these reasons have to do with the Tesla share price being up higher or being up lower, essentially. So this reason is more along the lines of how much money the company has to be giving to employees, essentially. So when Tesla hires new employees, or if there's an employee that gets a raise or promoted, or if an employee needs a stock refresh, all of these events are going to give Tesla shares to employees, essentially. And so what happens with tech companies that are pretty competitive and they have to give a certain amount of shares, it's more, they're targeting a certain amount of money value, essentially. Like if they want to give 20,000, 100,000, however much money they're trying to give. But with Tesla's share price being, let's say, $1,500, if they were trying to get to someone at $20,000, they're probably going to give $500 extra, for example. On average, when they're giving people shares, they're giving them $500, $600 more dollars probably on average. And if you spread that across all these events, because all Tesla employees are Tesla shareholders. So this is a pretty significant thing. Instead of being able to fine tune by, if you have a share price of $300, for example, you can kind of fine tune the amount that you're giving each employee. And you're more apt to overpay as a prestigious employer. And you're giving them more of an accurate amount for their employee, a more fair amount. Instead of underpaying them $1,500, you're kind of overpaying them a certain amount of money. So that's kind of a fair thing. And that has a big bottom line impact, I think, and I haven't been hearing anyone talk about this. Okay, so that's reason number two, and let's jump into my Tesla convertible bond experience and the conclusion of this saga. And so the figures I'm gonna give you today is basically on a per bond basis, and per bond basis means basically on a $1,000 value. It's basically the amount of bonds that I own divided by that amount of bonds that I own. That would give you the one bond, and that's the example that I'm gonna give today. So for each bond that I own, one bond was going to convert potentially to a 3.24 some fraction of a share for each bond that I owned. So did I get 3.2 something shares, or did I get 3 shares? What ended up happening? So what ended up happening is for each Tesla share, and I actually made this whole video already, but then a few days later, I actually got another transaction, some more cash in my account from this transaction, so I had to scrap that video. So hopefully that doesn't happen again. I don't think so, because I've waited quite a while, because this happened back in the end of June. So in June, what happened was I got my 2 shares per each Tesla bond that I own. And in addition to that, I got $1,000 of cash. So right off the bat, I could tell that, okay, instead of getting 3 shares or 3.22, I got 2 shares. And then $1,000 is kind of like another share back at that point in the end of June. So that kind of accounted for that. But what about the fraction? So I ended up getting the fraction about 2 weeks later on July 7th. I got $126.52. So all in all, for each Tesla bond that I held, I got 2 shares, $1,126.52. So definitely not what I was expecting necessarily or hoping. I was hoping for just getting more shares, but I'll take the cash. I'll take that. So what ended up being the cost basis of these shares. So for example, the 2 shares per Tesla bond, for example, that I own, those shares would have been the $1,000 or whatever I paid for the bond divided by 2, and that would be the cost basis for those shares. So maybe almost $500, or if I actually paid a little bit less for my bonds than $1,000 because the stock price went down. And being a convertible bond, the price fluctuates depending on if the stock goes up or the stock went down. So the stock was actually going down at the time when I bought the convertible bond. So I paid less than $1,000 per Tesla convertible bond. So my cost basis was a little bit less than $500 per share. I hope you guys got some value from this content and enjoyed this video, and let me know if you heard any of those 2 reasons I brought up before about the Tesla stock split. I'll see you guys in the next one. If you want to support this channel and get an amazing brokerage, here's my referral link to ETRADE. I also included in the description down below. And ETRADE is just an amazing brokerage. I definitely like Robinhood as well, but ETRADE is definitely something I feel more comfortable with promoting for newer investors and for experienced investors. It's just a solid platform with a lot of resources. I'm really into Robinhood as well myself, but I know that it's easy to not be as disciplined with Robinhood, so I feel like you gain your discipline with ETRADE, with that platform, and then go into Robinhood and knock yourself out.